Welcome to TradeTheMBI.com. This is John. This report is for the 30th of March, and if you listen to the background, it sounds like I'm in a crowded Italian school classroom or something, but this is the webinars that they do and how they're learning, and I think that's being replicated in a lot of different places across America, and for good reason. The spread of the virus, which they're trying to contain, and it looks like it's going to be quite a bit longer than most people anticipated. Something we kind of knew was going to take place based on what we'd seen from the models out of China, and then certainly out of what we saw at the beginnings of Italy. As I mentioned to you guys, you're way behind in America as far as preparation, and another big failure just the other day. I know there was talk about closing the tri-state area, preventing anyone from moving out and about, and this was the fallacy that happened here in Italy when they knew that the virus was in an outbreak up in Milan in the Lombardia area. They gave everybody advance notice and they fled across the country, spreading the disease much faster and much more extensively, and that's exactly what you're starting to see right now. As much as it's draconian, closing the tri-state area would have been the thing to do, and locking it down to prevent anyone from leaving like they did in China. So what does this mean? Well, from a market standpoint, it means that you're going to be looking at much longer to deal with the progression of this. So we talked about this before. We had positive extremes coming up through this setup right here, and then we kind of filled back most of it, also creating a positive extreme on that day that came down. So we filled back part of it and then just kind of completed the rest of the body of it. When you get these longer wicks coming through here, usually I'll go a little bit higher for my retrace value on them. It doesn't mean they're not going to completely fill. It's just that the body of your activity is from where the open was and to the close there. When they get to be a little bit longer, it's even more dramatic that way, and you get those a lot of times when we're at the 0 point, sort of like this, the star, doji, cross, however you want to refer to it. This is an inverted one. From an overall standpoint, you've got rising red that was coming up. We had rising green. The only problem was we had short-term buyers fading pretty quickly into the setup. The question was whether we were going to get a spider here, meaning the green dipping back below cyan and cyan popping back above, which would give you, a couple of legs right there. And then, of course, if you have the steel come down in the orange cross, you get a couple legs for, six-legged spider kind of effect. But it's just a fun way to think about it. But again, it's pretty easy for us. We get the 2505 from a daily standpoint. Above, you can stay long. Below it, I would definitely be cautious. It's not something that I want to be riding out. Now, if you need a bigger spread than that, obviously we have the 23%. So that's 2460 range. So these become very easy numbers to have as above and below pricing. But when we look at shakeout and everything, NASDAQ as well, still doing okay. Potentially could be making a lower scrim, but it's just the start of the day. It's still been in a rise. And I think we're going to see the earliest signals will come out of the 5K. So with the U.S. printing trillions, the ECB printing trillions, we sort of recognized that you didn't really need the Federal Reserve in the first place, because you can just make up money pretty much as sovereign governments. And that's kind of exactly what's happening. Will it lead to hyperinflation? Remains to be seen yet. That's the old Germany model of Weimar from the past. So we'll see if that plays out the same way. People have been talking about inflation for a decade plus now, ever since they started all the quantitative easing, and it hasn't materialized. Some of that was due to obviously mass immigration, bringing in a flood of workers, and then keeping rates low. So if we continue to do the same, I guess theoretically, if you charge zero interest on it and you just make up money, as long as it's going towards paying for goods and services at a normalized rate, you may not see the inflation on it. The problem we've got going forward, though, is you're still not creating any earnings, and we're having an S&P Dow and that are at near high levels. So, number one, the market would be factoring in the fact that you're going to have a deflated dollar, which is going to accelerate the market within really zombie land. So that's an interesting side effect because they'll discount for the reduced value of the dollar. Now, the euro pump has been strictly a function of central banks because what are you going to do with the euro? They're writing out, printing as much money as they possibly can as well, and they have a completely dead economy. So that's an interesting one as well. And this kind of tells it all. The oil. This is a crisis, and it's starting to affect. I know Capital One got involved in it. They were doing oil futures contracts. They got caught upside down on it. So a credit card company that could actually send the bank bankrupt because once the bill passed, it was part of a saving grace. The Fed stepped in to prevent them from having a multi-billion-dollar margin call. So who knows? They're with the idea that by next quarter oil rebounds. Well, how is oil going to rebound when you've just extended the quarantine? Find China starting to do some things, but they're looking at the potential of a secondary outbreak, and not that we would know it anyway, but even with China starting up their production, who are they going to sell to? There's nobody out there. So you're going to sell to phantom clients because, frankly, it was the U.S. and Europe that were their clients, and if they're not doing anything, this is where it's not going to be so simple starting things back up again if the timing is going to be lagged, and it's going to be lagged in America too. Because while New York gets hit the hottest, it's going to be a few more weeks before some of these other hot zones that just started build up to the same levels. Find the social distancing thing is going to help, but as we can see, the same thing happened here in Italy. People like to thwart and do their own thing. And the reality is one person can infect, up to 10, 20, 30,000 people. There have been some studies that suggest that one person potentially can infect up to 39,000 people or more. So these are big numbers when you're talking about it. And for every one you infect, they're going to potentially affect another 6 to 8, maybe more. So it's long from over. Here we have gold is going to be maintaining, well, it was always going to be at these highs. It should break out to further highs, particularly if we start to see some price inflation. Looking at the futures open here, we had a nice decline coming through, kind of evened out, and then just started to shoot up. Once we had a little EBM reset. What you had was just a steady rise in DOC breaking into new zone. Green was already above. Orange had dipped below. Yes, you can slide these back to any one of these. Peak moves right back through here. Just happened to be that spot because it kind of came across for a little bit. The positive extreme for me, I like to see it when those get filled as an entry point. So that's the other reason I had that over. What you will notice a little difference on my DOC right here is because this is a chart. Actually, I think I was using this one as well. I made some interesting, well, I guess you would call them discoveries or calculation modifications. It was a piece I'd been working on for a few years about covering best ways to avoid early buy signals within the decline, particularly like this kind of a setup within the orange. And it was a matter of, if you think about it this way, it's one of those weird things where you say, oh, it came to me in a dream, but in a sense, I was watching a movie and there happened to be a flock of birds. And in effect, what we do with a lot of this algorithm stuff is we're basically taking what was whole, breaking it up into little pieces, and then trying to stick it back together again. This is what the algorithms typically do when they're making their buys and how we're able to see it. Well, from a broader standpoint, if we can rebuild, so if we're imagining building a body, you start with the foundation, the feet, the legs, and that, and finding that precursor that will prevent these pop-up signals and let us know which ones are worthy of taking versus the ones that are less likely to produce significant bounce. And this has always been the thing, because from a short-term trader standpoint, I never minded scalping for, several points or more, depending on what the signal was giving me. But I also know that from a broad-based standpoint, too, a lot of people want to be able to enter a trade, have it move a significant distance, so they're not having to constantly monitor and take care of it. So I've always tried to modify and work the best within both camps. And this is where I'll still leave flexibility on a couple of the paint bars for those who are super active traders compared to those who want to have a little bit more extended runs. And that was really the idea behind the PNT too, was to give the impression of treating the signals as trades, so that the buys and then the sells would come through in just a matter of working exactly where those transition points were. And that's just been a subtle adjustment. But I did complete a bunch more of the functions. Was actually working to create a couple of additional ones. So we'll be able to send those out with the new month's indicators, and I'll be sending out the renewals shortly. I mean, what an event. It's been a spectacular month, that's for sure, Mama. I mean, you couldn't ask for anything more than that. But from an intraday standpoint, we had a lot of good setups that came through. Got a little choppy in between some of it, but once it took off with a few of these, they just kept going and pretty clean all the way into the end of the day. We got to this final peak move with a bunch of positive extremes that left some very clear and identifiable retrace modes, and then boom, what more do you want? A DOC spread that is with magenta and that below 15, beautiful rollover of the gold at that particular point. I mean, this was spot on. Whether you were able to nail it up at the 23 or just below didn't really matter, because you filled in all of those key levels, and then boom, it was just a matter of, okay, what stop do you want to be following? From my standpoint, I was just following 100% on this, and was going to make an evaluation at the end of the day, because I was having trouble with the system freezing up when I was doing a lot of the different calculations and things like that. And so when futures opened up, that was brilliant. Went ahead and took gains on the secondary dip. We had the dip below the red line, so I was expecting a good portion of it to fill back, but it was quite a little wick setup going on in there, so I was looking for a little bit less out of it. And once we had the orange dip in that, it was going to get kind of clear, because I saw once this peaked up and we started to retrace, it didn't look like green was going to dip back below, and so I took some gains, still left a couple on, still have a few contracts left. While I was sleeping, you had this big run up and then partial pull back down. What was the positive extreme on this one? Was this candle right here. So we've already filled the positive extremes from the overnight session, and looks like they're supporting it. I mean, we're already back to just about dead even in the previous algo level 2519 range. In fact, we're just forming a little blue candle right here without a dip below the orange, below red. So it's probably going to be a little bit tough for that one to excel. Nice part is when you break though up into the new zone, you can just follow along with that red, particularly if greens. This is where I'm looking. If green doesn't get past the cyan and or you have a fade of the steel, that's where you know you can attack these, and we're going to see that pretty clear within another bar or so. So it kind of depicts itself from that standpoint. But all in all, really good developments, and if I get the additional setup in here with the DOC, because this is not what your white line will look like on the DOC, so it'll be a modification that will be into the new, but it's going to create unique pivot functions. It's also going to trade make some big changes to the NBI candles, so you'll be seeing that one altered, which will also be affected in the paint too. You won't notice anything. It'll just change where the candle appears. It'll seem like magic. But that's exactly what we want, to look clean and consistent for extraordinarily profitable trades. So this has been some really good breakthroughs. These large volatilities provided some excellent math clues that really helped open things up. So the unique situation actually fueled them giving themselves up a little bit more which in my mind is fantastic. So, as always, though, trade well and look for your renewals emails, because we're going to switch over here at the middle of the week, and I want to make sure everybody's got their indicators set to go, because this is good stuff. Trade well. We'll talk to you later.